Welcome Investorholics and friends to another ETF Spotlight review. Today we'll be continuing our series on bonds and fixed interest type products. Today we'll be looking at VCF, which is the Vanguard International Credit Securities Index. This one is hedged and it's brought to you by the mighty Vanguard. So this one might be for investors seeking exposure to a diversified portfolio of international fixed interest securities that are relatively unaffected by currency fluctuations due to the hedging. As we kind of mentioned before, this one's backed by a competitive price, sound index, and Vanguard's pretty good capabilities from the basis of a positive view. Investors with a medium-term investment horizon should look at this one. Obviously, if you're seeking a steady and reliable income stream, so this one, I mean, if you're looking for capital growth, it's probably not the one to be looking at. But yeah, stick around if you're looking to build some bonds into your portfolio. This might be one that you're interested in adding to your portfolio. Well, hello there, Investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, so the Vanguard International Credit Securities Index seeks to track the return of the Bloomberg Barclays Global Aggregate Corporate and Government-Related Scaled Index hedged into the Australian dollar before all the fees and expenses and all the rest of it. So the overview of the fund. So the ETF provides low-cost exposure to a high-quality income-generating securities issued by government-owned entities or government guaranteed entities and investment grade corporate issuers from around the world. Hence, it's a global product, international. Investments in the ETF are predominantly rated BBB or higher by Standard & Poor's or the equivalent rating agencies, Moody's or whoever's doing the rating at the time. The ETF is hedged to the Australian dollar, so the value of the ETF is relatively unaffected by currency fluctuations. The Y factor, so competitive long-term performance. Vanguard's investment approach provides investors with an efficient way to capture long-term market performance. Diversification, the fund invests in a diversified portfolio of securities, which means the fund is less exposed to the performance fluctuations of individual securities. We'll touch on that in a later section of the chat. Low cost investment. So, we want to be keeping our investments at low cost. So when we're looking at ETFs, cost is also always a major factor, I should say. The fund has low ongoing fees, as Vanguard strives to minimize the costs of managing and operating the fund. So as we know, Vanguard is set up a little bit differently to a lot of these funds, and they're kind of like a not-for-profit, I should say. Or when you become an investor, you also become an owner. Okay, so at the close we had a net asset value of $49.08, trading just above the net asset value at $49.15. Market cap of $187,100,000. Management costs pretty reasonable, 0.3%. Distribution frequency is quarterly, so January, April, July, October, there'll be some money coming into your back pocket, your bank account. Dividend yield is not too bad, at roughly 2.5%. So after the most recent market crash, current price possibly represents a solid opportunity to build a position for the long term, if that's kind of what you're looking at doing, building some bonds into your portfolio. So I mean, that's kind of a strategy that you might look at if you're building the balanced portfolio. This ETF could be used as part of that, or a bit of a cornerstone. So yeah, as I kind of touched on before, for investors seeking exposure to a diversified portfolio of government or government-associated fixed interest securities. Alternatives, we always should be doing our research and looking at alternatives. So, possible alternatives could be coupon, cred, IHCB or RCB, but there's lots of alternatives in this space, so do your research. Okay, on the left hand side you can see the top 10 issuers. It's a bit of a mixture, but typically it looks like North American issuers. So on Province of Ontario, you got JP Morgan Chase, Province of Quebec, AT&T, Bank of America, Citigroup, Wells Fargo. So they're all American. So 7 out of the top 10 issuers are American. So you've got lots of exposure to the American market. So the index has over 3,500 issuers and over 17,000 individual securities. So this is massively diversified. They have an average credit rating of A. The weighted average bond maturity is 9.5 or 9.9 years. So you might as well say 10 years. So on average, when they buy a bond, it has a maturity of 10 years, which is good if you're looking for stable returns on your income. So VCF's lengthy duration profile should lead to outperformance in periods of equity market stress. The bond yields typically decline in bear markets, so offsetting losses from credit spreads widening and equity. So you shouldn't see the same downturn because you've got the a 10-year time horizon on these bonds. So you should in a bear market you shouldn't see quite as much fluctuation in the price of the ETF. For income-focused investors, it's worth noting that Vanguard engages in currency hedging, as we sort of touched on before, which is historically caused income volatility due to hedging gains and losses. So they've effectively changed the way that they do this. So they've elected for the attribution managed investment trust regime in 2017, if I can get that out. So that's changing the structures helped smooth the income distributions. However, Morningstar still give this a neutral rating. So from memory, that's 2 out of 5 stars if you're thinking in a star rating. This one for me is not really that exciting. You look at the dividend payout; it's quite low. Pretty much just matching or below inflation. So really, if you're hoping for capital appreciation in the value of the ETF, because pretty much if you're only getting the 2.5%, you're losing money effectively over time. So this one's probably not worth owning from my point of view. You can see down the bottom here, since inception it's done just over 5%. So yeah, just over 5%, marginally over 5%. So for me, that's not really somewhere I'd put my money. But if you're looking for somewhere that's a bit, I suppose it's kind of safe, I suppose, but really you're not getting a huge return, maybe it's just worth looking at. But for me, it's a no. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.